Hey guys, SamaKaze here. So, I found this video on my feed and I thought I'd do a reaction to it because this really is right up my alley, honestly. The bank of mom and dad. Can people still afford to grow up?
The Bank of Mom and Dad is now one of the largest financial institutions in the world. A 2019 study revealed that American parents represented the seventh biggest mortgage lender in the country, financing over $47.3 billion
47.3 billion. Dang, that's a lot of money.
in the year before.
Oh,
That's
wow.
particularly impressive, since a lot of
Yeah.
parents are not loaning the entire purchase price of a property, but are
Now,
instead just loaning their children a down payment so they can get another even bigger loan from an actual bank. Now,
jeez. Oh, yeah, sure. Sure. Mom and dad, can I have a loan of I don't know, $2,000, $3,000 and then I'll get a loan from the bank? Oh, sure, sure, son, sure.
there's probably something to be said about our lax attitude towards taking on endless debt here.
Yeah, yeah, I think there is. I think there's a lot to be said about that because honestly, we've gotten so much we've gotten so comfortable with taking on debt that we even are financing our DoorDash now. The whole Klarna thing paying for. Yeah, they started doing that with DoorDash. Oh, I'm going to finance my latest McDonald's binge. Right.
But the Bank of Mom and Dad is not only in the mortgage industry. A survey conducted by Savings.com found that parents were, on average, funding their adult children to the tune of $1,474 a month.
$1,400 a month. My goodness. That's almost exact. That's almost the entire amount that mom and I both have coming in a month just for us to be able to live on. Mom gets Social Security retirement. I get Social Security disability. Between the two of us, we get a decent amount. And dang, that's horrible. What in the world? And people think, oh yeah, sure, sure, we're and that's 6% higher than last year. Sure. Wow.
To cover basic living expenses like groceries, medicine, and gas. Money was also lent or gifted to
No, 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 no. You want a cell phone, you get it your dang self, and we ain't going on vacation.
cover cell phones and even vacations. And with
Uh-uh.
rates like these, bank customers are sticking around. Even millennials who are now over the age of 30, at minimum, were still loyal clients to the Bank of Mom and Dad, receiving just under $900 a month on average.
I'm sorry, I'm a millennial. I do not get
Loyal
$900
clients
a
to the
month.
Bank of Mom and Dad, receiving just under $900 a month on average.
Yeah, I don't get $900 a month. No, I don't do it. I don't because I don't ask anyone for help for money because we've managed to do it ourselves for the last for all of my life and even before. Um, the only thing I've ever asked for help with in recent times has been the last month Dad died, and I didn't realize just how expensive the bill would be, and we didn't have the funds, so I went to my church and I asked for help, and they covered the entire bill. So that's the only thing I've asked for help with in recent memory. So that is just what that's just what it is. It's what it is. Oh, my tracking stopped.
Now, I don't know about you, but my mom and dad aren't giving me $900 a month. So
Yeah.
clearly, that average is being influenced by a lot of people who are given a black card with the bank at birth. But there
Yeah.
is actually a more concerning trend here. Parents are, on average, contributing significantly more to their adult children than their own retirements.
Unfortunately, that has become common in the last few decades, where retirement and retirement money is becoming way more
Mom and dad's
way more uncommon than anything else.
financing has also become a lot more complex. With equity releases, finance gets
Okay, down payment on a house. Okay, fine. Wedding fund, maybe. Can you co-sign my Tesla? Absolutely freaking not. I'm not paying for your Tesla. You pay for it yourself. You go down to the Ford dealership and get a Ford hybrid or you go down to the Toyota dealership and get yourself a Prius, because I am not paying for an overpriced geometric piece of crap. I'm not doing it.
Guarantees, networking, tranche benefits, and of course, serious terms and conditions. If there is a run on this bank, we might end up in a situation where parents can't afford to retire and children can't afford to grow up.
Children can't afford to grow up anyway. You know why? Because people are just absolutely ridiculously unhinged, and they do not want to. I'm sorry to say, but no one wants to admit the elephant in the room that is the economic burden of living on your own, and the fact that most young people cannot afford it. They can't afford it.
More than 50% of 18 to 29-year-olds are still living with their parents.
Without your mom's support, what are some of the things that you probably wouldn't be able to have?
I would definitely not have a place to live. I would not have gas for my car to get here. I would not have food in my mouth.
When he needs something,
Yeah. A lot of adult children can't afford life because life is getting so expensive. It's why my sister, who has 5 children, has 2 of them that are still living with her, and then why mom and I still live together, even though I'm 34 and she's almost 70. It just is what it is.
My friend, he lives on La Jolla. He has like a $300 a week allowance.
$300 a week. Yeah, sure. I wish I got that much.
On average, California parents believe their children should be financially independent by the age of 24.
Okay, 24.
So
Why
there
not?
are really 3 groups that lose in this whole arrangement. Parents who are increasingly supporting their children later into life, the children of families who can't afford to support them, and, even though it's much harder to feel sorry for them, the Nepo babies themselves, whose financial assistance often has a lot of strings attached. So the inherent
wonderful.
hypocrisy might not be good for anybody.
Yeah, I don't know what kind of strings are attached to this, but honestly, I can't feel too bad for them, but I do feel bad for them because they don't necessarily have the life skills to do very much in life. Most of their wants and needs for them are being solved by pressing a button on an app to order something to be delivered to them. And that's no way to live. It's really not.
But clearly, some people are worse off than others.
Yeah.
Around half of young adults over the age of 18 don't receive any financial support from their parents at all. Either because their parents can't afford to, they don't have a good relationship with them, or because they are dead. Losing them.
Yeah, unfortunately that tends to be a lot of problems, you know. My dad and I weren't really that close, so when he passed last month, I didn't really get a whole lot of I knew that there was going to be a lot of problems. I didn't realize he didn't have any life insurance still. And if I'd have been able to be connected with him and communicate with him more, I might have been able to get him to actually pay on a life insurance plan still. And he might have been able to have something to cover everything instead of me having to go to the church. Might have even had some left over, but that is what it is. What it is. The biggest thing is I feel bad for these children that have bad relationships with their parents. And so even if I've got a friend, she's down in Kentucky or somewhere down in one of the lower states, stranded because she'd left our area because the family she had up here was not supporting her at all and she needed to get away. She went down there with her friend, with her then girlfriend, and she was alienated from her family down there because her girlfriend manipulated everyone, and now she's living off of the kindness of a man that she met down there, but she has no way back. She has no way out. She has no way away from the people that are continuing to just treat her horribly, and it's ridiculous. And it's because she has no family that is willing to support her. It's hard to live without support. It is.
A support network can and does statistically do more financial damage than just missing out on direct deposits.
Yeah.
Balancing a job, studies, ambitions, and comfort is incredibly difficult for someone just starting out. In
Yeah.
most parts of America, to get a job, you need a car. To get a
I was just explaining this to someone online the other day. They said, "Why don't you just go get a job?" I can't get a job because I can't drive because my eyesight is so bad. I'm a danger to everyone around me and to myself if I were to get behind the wheel of a car. I've been told this multiple times. I've been told there's nothing they can do to help. So therefore, the only thing I can do in order to be able to get around town is I ride my bicycle, and even that doesn't get me to a job. So when people when a job application asks for a photo for a driver's license or asks me if I have a reliable vehicle, I have to say no, and so then they don't call me because they know I don't drive and therefore I can't be reliable to get to their particular location, especially if I'm going through a temp agency that wants you to go to a different location every time. So not having a car, that's kind of a deal breaker for being able to get a job.
car, you need money or to take out a loan. To go
Yeah.
to school is more loans. To get a place to live, you need to buy furniture and put down a security deposit, and you are still probably going to want to eat in the first 2 weeks before your paycheck comes in.
Yeah. You need to eat and live, otherwise you won't get to that first paycheck. You'll waste away to nothing before you get there.
Starting from zero means that the only option for the seed capital of life is high interest debt.
Ugh, I hate that. I do. The fact that we've gotten so used to just telling young people, go get a loan and go into debt in order to be able to start your life. Yeah, that really teaches a lot of life skills there, doesn't it, people?
Even just having a place to sleep and a car to borrow is a massive head start over this kind of situation. Even the
Yeah.
most modest of safety nets can also let you take on some more calculated risks.
Yeah,
after college,
exactly.
I took an internship at an investment bank. I had to live in an expensive city with no real savings and no guarantees that it would eventually lead to a full-time position. But I was able to do it anyways because I knew, in an absolute worst-case scenario, my parents would cover a plane ticket back home and let me stay with them until I was back on my feet.
Yeah, the thing is, not a lot of people have that option because not a lot of people are able to even make the trip out anyway. You know, in order to be able to get to this place that has this job, you need to have money either for a plane ticket, a bus ticket, or a vehicle that can drive you all the way there. And a lot of people don't have that. A lot of people don't have those options, and so you end up stuck in the place that you lived all your life, there where there are no real prospects for employment, where there is no real um, opportunity for growth or for advancement, and where there is no real support network because after a while, your family either dies out, moves away, or stops caring. And that's ridiculous. But it's the way that we live these days. It's the way that we've always lived, but it's getting worse.
Even seemingly small advantages like this can be the difference between getting a high-paying career or missing out on it. To take the safer but less lucrative option. This is the same reason why successful actors or business people overwhelmingly come from stable backgrounds.
Yeah, because a lot of successful people that come from successful backgrounds already have a safety net called a golden parachute. It's ridiculous.
Because being able to take a risk is a luxury a lot of people can't afford.
Yeah, Mr. Bone Spurs got a small loan of $1 million to start his career, and guess what? He still managed to bankrupt several companies, but he's still able to live like he's super rich because he had money to fall back on. He had family to fall back on. He had assets to fall back on. That's the difference between most of these people and most of us.
Peter Temin, an economist from MIT, has claimed through his now infamous research that breaking the cycle of poverty now takes 20 years at minimum with absolutely nothing going wrong.
And there's the problem. The fact that you need to have an absolutely perfect run in order to get through the 20 years that it's going to take to get out of the poverty level is ridiculous. The fact that you need to basically have a flawless life for 2 decades just to get where you need to go is absolute bullcrap. It's a Ponzi scheme, and the government sold it to all of us. It did.
He noted that the quality of your nepotism really depends on what your family was doing back before the 1970s when productivity growth started to outpace wage growth. Before this time,
Productivity.
people with professional incomes could amass equity in asset markets and real estate relatively easily, which built up a secure foundation. Over
Yep.
time, hourly wages ended up buying less and less, and debt became more available. For people
Yep.
without assets, it became a tool to keep up. And for people with assets, your debt became their equity. The only reason
Oh.
homes are so expensive today is because people can get loans to buy them, either from
Yep.
a real bank
Yep.
or the bank
Yep.
of mom
Yep.
and dad. The analogy
Yeah.
is that starting a fire from scratch is really, really hard. And even the slightest bit of rain can destroy even the most dedicated efforts. Starting a new fire with a little flame taking from an existing fire that has been burning since the bright sunny days of the 1970s is much easier, and even pretty bad weather probably won't put it out once it's going.
Okay, so the way that this analogy works is the rain is, emergencies, all right? Your car breaks down. Your 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 family member dies, blah blah blah, whatever. And it's an expensive emergency. And so you need to take money out of what you normally would save to be able to spend it to be able to take care of that need. The problem is, like this analogy pointed out, a lot of people that already have a decent fire going or a decent bit of savings going, that's not going to cut into it very much. But those that are just getting started, like mom and I, when we tried to save up money for a couple of years. Every time we'd get a little bit of money saved up, and an emergency would happen, that would barely cover it, and we'd still have to dip into our normal funds just to be able to cover the rest. And so it's a ridiculous cycle. If you're poor, you're going to have to stay poor because honestly, unless you can manage to luck out and win the game of life and get a decent position, or somehow get scouted for a talent that makes you a lot of money, you're going to end up poor for the rest of your life because every time an emergency comes around, your savings goes kaput.
So yeah, nepotism is overpowered. I know that's probably not shocking to you.
Nope,
The real
not at
problem
all.
is what this has been able to cover up so
Yeah.
far. So it's time to learn how money works to find out how to fix it and what happens if we don't. This week's video is sponsored by Odoo. Odoo is a complete business management platform
sponsor.
that brings together everything from sales and CRM to inventory, accounting, and even a full website builder, all in one place. With Odoo, you only use the apps you need, and everything just works together. No tech headaches, no juggling a dozen logins. We recently gave How Many Works library a full revamp using Odoo, built a new internal site, streamlined our production process, and made everything way easier to navigate. Their website builder is surprisingly powerful and actually fun to use. You can create professionally looking pages without touching code, and link them directly to your workflow, whether it's sales, scheduling, or content management. And we have another project we're working on them that's going to be announced soon. So, if you want to simplify your setup or build something from scratch, give Odoo a try. Hit the link in the description to test out any app for free. No credit card needed. The means and methods by which wealthy parents can help their children have grown considerably in complexity, and some of them have been made possible by tailored products from the actual financial industry.
Yep.
Home equity conversion mortgages, otherwise known as reverse mortgages, have slowly
Oh, I hate reverse mortgages. A friend of mine, his parents went for that and they ended up actually paying more on their mortgage later than what they would have initially because the stupid way that they made it come out.
become one of the most popular ways for the bank of mom and dad to raise capital.
Yeah.
They work like this. If an elderly person past working age has a paid-off house but no way to earn an income, they can go to a lender and get a cash-out mortgage using their home equity. The industry standard normally caps this at around 30% of the home's value. Someone who owns a $450,000 home could get a loan of $150,000. Now, with no way to actually make the repayments on this loan, the lender doesn't actually expect any money back. Instead, the debt just grows and grows with interest until the homeowner sells $50,000.
Wait, what?
Has a paid-off house but no way to earn an income, they can go to a lender and get a cash-out mortgage using their home equity. The industry standard normally caps this at around 30% of the home's value. Someone who owns a $450,000 home could get a loan of $150,000. Now, with no way to actually make the repayments on this loan, the lender doesn't actually expect any money back. Instead, the debt just grows and grows with interest until the homeowner sells the property, or dies. The bank then gets first dibs on the proceeds from the sale, plus any interest that accrued over the years. These products were particularly popular between 2000 and 2008, as tapping home equity became a
So there we go. There's the housing crisis of '08. That's the housing market crash. That's what happened. Reverse mortgages went up in popularity, and people bought into the lie, and because of that, the market crashed because no one could pay back the loan. No one could pay back the reverse mortgages.
Tool to fund lavish lifestyles or to invest in other properties. Famously, this all ended super well and everybody lived happily ever after.
Nice joke. Nice joke.
Anyway, while reverse mortgages are still not as popular as they were back then, thanks largely to much tighter regulations, they are still creeping back and they now represent more borrowing overall because houses have become more expensive.
Yeah, that's the thing.
The financial sector loves these loans because they, on average, have significantly higher rates and fees than typical home mortgages because they are a more bespoke financial product. But despite all of these problems, there are two reasons why they are becoming more popular again. The first reason is that people simply need money. According to data from the Fed, even people who have had a lifetime to build up assets still overwhelmingly have most of their net worth in their family home.
Unfortunately, that tends to be the biggest for a lot of families that do end up being able to be financially stable enough to do it. That tends to be the biggest asset that anyone can ever get is a family home, because they figure they can pass it on to their children and that can be what their inheritance is. And so they don't have to worry about that in the future. The problem is with these refinance loans and everything else, that ends up not being the case because we end up having these reverse mortgages that, like the guy said, accrue interest and then that interest gets passed off to the consumer. And so either the children had to pay that off, which they can't, or the bank takes away the home. So then it was just a moot point to even have the damn thing in the first place. Sorry about the language.
You can't sell a portion of your home like you can a stock portfolio. And living expenses have become particularly bad for old age services. Again, I know this isn't shocking to any of you watching. But the second reason behind the growing popularity of these loans is that it's become increasingly popular for parents to refinance their house and give cash to their children as an early inheritance.
Yeah. The thing is, early inheritance should not be a thing. It should not be something that happens.
It's a trend growing so quickly that banks like Merrill have their own planning teams for it. Now, to be fair,
oh my God, even the banks themselves are giving guides on how to give your kids an early inheritance because they know that it's going to be a popular opinion, that it's going to be a popular option, that it's going to look good, but it's not going to be good except for the bank. Because the bank always wins.
For the families that do have the assets to do this,
oh my gosh,
advantages to doing it this way. The first is simply that they get to actually see their money getting enjoyed by their children rather than just guessing what they will do with it once they are dead.
Right, fair enough. Go away. I don't know. I don't care about Eve Online.
But there are also more pragmatic reasons as well. Money for young adults just starting out in life is going to have a bigger impact on opportunities than a larger inheritance received later. The average age someone receives an inheritance is now 51 years old, which actually makes sense as the average life expectancy minus the average age that people have children. That age used to be early 40s, as people live shorter lives, but with an aging population, the regular passing down of assets is happening later and later. A University of Pennsylvania survey also found that people receiving inheritances later in life generally got significantly more money as their parents statistically had more time to build wealth to pass down.
Exactly. The fact that people are giving away inheritance earlier means that there's nothing left.
Way too long though, and it drops down again as financing old age care can get really expensive.
Exactly.
So, if you're trying to plan this out, early 60s is really the sweet spot.
Yeah.
Now, obviously I'm joking, but that same survey also found that 70% of people would rather receive an inheritance of $250,000 at age 30 rather than $1 million at age 50.
Oh my God. Okay, $1 million at age 50, okay? I'd be happy with that because I could live off of that in a decently low-income community in a decent house with a one-floor plan with nice space and everything else. I could live off $1 million for the rest of my life if I budgeted it well. But these idiots want to get a $250,000 inheritance at age 30 and blow it before they end up being 40 and wonder why they don't have any money.
A cash injection earlier in life can help you get set up when you most need it to buy your
Oh, sure, right.
first home, pay off student loans, and stretch out the budget for potentially raising a family. A windfall later in life should just make a comfortable situation even more comfortable if you manage to save and invest diligently. Now that's a big if, because obviously a lot of people don't know how to handle a big injection of cash. Internal data from a major financial advisory firm found that on average, recipients of a major inheritance took 19 days before they purchased a new car.
Oh my gosh. You have a car. You have a car. You have a vehicle. You have something that takes you from point A to point B with no problems. Maybe pay for it to be maintained a bit better, but don't buy a brand new vehicle. Oh my God. Why are people so stupid?
And that's the third and most commonly overlooked service from the bank of mom and dad. They offer in-house financial advice, whether it's wanted or not.
Whether it's wanted or not, and whether it's good or not. That's the thing. It's never good for you. It's always good for the person that's advising you because they get kickbacks whenever you take out a loan. They get kickbacks whenever you default on your loans because they're the ones that set all of this up. Yeah.
Early inheritances can be more carefully administered with terms and conditions to make sure that recipients don't squander the money, but also as a way to keep children dependent for longer than they really should be. Now, the trope of the trust fund baby exists for a reason, but reverse mortgages have let even middle-class families do the same thing to help their children out. The Savings.com survey found that 77% of parents that gave money to their children did so with conditions attached. Now, some of those conditions were simple, pragmatic financial advice, but more often than not, it was personal rules related to their relationships, career, and family planning. Now, it may be hard to feel sorry for people getting major financial assistance, but this is a genuine burden that's increasingly hard to say no to, because these financial advantages are just so hard to compete with. Even with an extremely high income, saving a significant amount of money is challenging when realistic assumptions are made about
1/3 of Americans making 250 grand live paycheck to paycheck. Where do these people live? Where do these people live that they make that much and are still living paycheck to paycheck? Okay. Let me break it down. Calculator. Okay. 250,000 divided by 12 months in the year. You're getting 20 grand a month and you can't afford it? Oh my gosh. Ah, goodness mighty.
rent, student loans, and the cost of living where most high-income jobs actually exist. Similarly, even a modest salary paired with a big cash injection can put someone decades ahead of a more highly compensated peer starting from nothing. If the price of this head start is playing by mommy and daddy's rules for life, then it's pretty hard to say no to.
Mommy and daddy's rules for life. Oh no.
It's also a self-perpetuating problem. Things can only get so expensive if nobody can afford them.
Right.
Imagine being able to build an app with
Shut up.
just by thinking about it. Meet Base 44.
The reason that
I
college
thought I'd
tuition has
turned off
outpaced
ads.
inflation is because student debt has become really easy to access and really safe for institutions to offer.
Oh god. Yep. Less education for your buck. Back in the college tuition inflation and overall inflation. College tuition is up almost 1,200% versus regular inflation since the 1980s. I wonder why. Because everyone wants their dang money.
Similarly, home lending has become easier and cheaper thanks to things like national credit reporting agencies, low deposit mortgages, and tax advantages for homeowners. And that's all just made entry-level homes more expensive. If getting an advance at the bank of mom and dad becomes the norm, it will again just make big life milestones more expensive for everybody, including those that unfortunately don't have open accounts there. And this is why more and more parents are feeling obligated to help their children, even if they can't really afford to.
Yeah, that's unfortunate. It's unfortunate the parents can't afford to, but still feel pressured to.
Starting out in life has become extremely expensive, but so has the stuff at the end of it. Aged care has become a huge and oftentimes predatory industry.
The fact that you can lose your home because you had to go to a care facility is not something that should be a trend, but it is.
Where comfort really does depend on how much people can afford. Almost half of the surveyed parents reported making sacrifices to their own financial security to support their adult children, with the most popular source of funding simply being retirement accounts. So the bank of mom and dad isn't good for mom and dad. It isn't good for the children who give up their independence to get a head start, and it certainly isn't good for the children from families who can't support them, or worse still, who they have to support. But the world's biggest financial institution also isn't good for a generation of people who don't even exist yet. It's no secret that one of the main reasons why people choose not to have children is because they simply can't afford to. Even
Yep.
amongst high-income earners, the financial burden of children is making a lot of people reconsider starting a family, with most reporting to Pew Research that they have other financial goals that need to be met first. If people assume that they will need to be the bank of mom and dad, they are naturally going to want even more financial security before starting a family. Because
Exactly. That's why I'm never going to have kids, because I know I can't afford it.
not only do they need to get themselves set up, they also need to be comfortable enough to support their children so they aren't left behind. Starting a family is financially scary enough when it's an 18-year commitment. But if
Yep.
allowances to 30-year-olds become an expectation, it's going to preclude the vast majority of people. Now,
Yep.
the obvious solution to scaling back the bank of mom and dad would be to make it easier for young people to support themselves. But to do that, you really need to understand why it's become so hard to get ahead. Go and watch this video next to find out what has changed that left young people so far behind. And don't forget to like and subscribe to keep on learning how money works.
That was a good video, guys. That was a good video, chat. I definitely think that this was one of the more informative videos about this whole thing. I just think that in the next 20 to 30 years, we're going to see a significant trend that's either going to break or make whether or not we can continue to have future generations being born and grow up, because otherwise something's got to change. And first of all, it has to start at the Fed. We got to figure out how to get the Fed off our backs and stop the inflation from getting worse. Anyway, guys, thanks for watching. Hope you had a wonderful time watching this video, and I'll see you again soon. God bless you. Bye.